Hi, my name is James Robinson. Today we're going to talk about the August results for my investment fund, which I call the Extrinsic Value Fund. August was a very good month for the S&P 500. It was up 3.03%. Our fund was also up, and we actually outperformed the S&P 500. We did 3.13%, so we beaten the S&P 500 by 0.1%. The fund started the month at $10.42 per share. We ended the month at $10.74 per share, which is an all-time high for us. It changes our total performance for the year since January 1 to up 7.44%. We were up 4.9% as of the end of July. The annualized rate of return, so you take the 7.44% and you calculate that based on the percentage of the year that's passed. We're on a pace to make about 12.77%, which is closing in on my goal of 15%. We're still trading the S&P 500 for the year, but we're trading it now by less than 1%. We're down 0.31% versus the S&P 500. This month we were able to convert one of our stocks from our short-term investment fund to our long-term investment fund. That stock was Pfizer. To recap, that means that from the period of time when we bought the stock, it's gone up 15%. So just to recap, my goal is to own 15 stocks in what I call my actively managed fund. When one of those stocks goes up 15%, excluding dividends, then I sell the original investment, I keep the profits in that stock, and I take the original investment and I reinvest it in other stocks. When we sold Pfizer, we replaced it with Manpower Group, which symbol is MAN. We bought that stock on 8/6. We paid $93.25 a share for the stock. When it goes up 15%, excluding dividends, that'll be a company which will move hopefully from short-term stocks to long-term holds again. So here you can see a list of the 15 companies that we currently own in the portfolio, as well as the percentage of the portfolio. Combined, they total about 89.1% of the fund. Again, we'll hold any of these stocks until they've appreciated at about 15%, excluding dividends. Then we'll move them into the long-term hold and replace them with another company which we think is also equally undervalued. Here you can see the list of our successes. These are companies which we bought because we believe them to be undervalued. They went up 15%. We sold off the original investment. We kept the profits in our long-term holdings. There's now 15 companies we've done that with so far this year. They make up about 10.9% of the portfolio. For the first time in several months, we made a small investment in the fund in terms of additional cash. Really a pretty negligible amount, less than 1%, about actually 0.18% of the value of the fund in terms of additional monies put in. I increased the total amount of shares we own by about 30 shares, which again is negligible. During the month, 10 stocks paid a dividend, but they didn't equate to very much money relative to the fund, less than 0.1%. Basically, the cash on hand increased by about 0.27%. That's dividends, some small profits from trading the Pfizer position, as well as new investments. My goal is to be virtually 100% in stocks. As of today, we're about 7.88% in cash, so we're close. I haven't spent much time talking about dividends in the fund to date. It seems to me that dividends are too often ignored by investors. People tend to value investment by how much the stock goes up. I look for solid dividend stocks. When I've got two stocks to choose from, I'll choose the one that pays higher dividends. It's a new source of funds to invest, and it's a sign of the firms that we own. It's a sign that the firms we own are making money. So here's a chart of the dividends paid this year. The good news is our dividends do seem to be increasing. I think this is due to several factors. First, we have more money invested in our funds, and we're getting dividends paid not only from our active portfolio, but also our inactive portfolio, which started the year at 0% and is now about 10% of the fund. We're also more heavily invested than we were, so we've got less money invested in cash and more money invested in stocks, and those stocks tend to pay dividends. To date, we have been paid dividends equal to about 1.44% of our invested funds. In August, we received fewer dividends than in other months, but this is mostly due to timing. Many of our stocks just don't happen to pay dividends in the month of August because they pay dividends quarterly. Makes sense, July was a very high month, so it stands to reason that August is going to drop off a little bit. We think the more valid measure of dividend performance is to look at quarterly numbers, so we put that in there. And again, we would hope that quarter over quarter we'll have these amount of dividends that we're receiving just generally slightly increase. We hope that our companies will pay a little more, we'll have a little bit more invested, or have some more profits to invest, and those things will tend to accumulate in additional dividends being paid. So to recap, our stock investments are up 3.13% for the month. We managed to outperform the S&P 500 by 1/10%. We moved one company, Pfizer, from short-term investment to a long-term investment, as it has created a 15% appreciation from when we bought it. That moves the amount of our funds that are now in the long-term hold to 10.9% of our invested funds. We added one new company, which kept 15 companies in our portfolio. The new company was Manpower Group, whose symbol is MAN. Our cash decreased to 7.88% of assets. We researched 5 new companies. We didn't do much research this month. We haven't talked about that. We've had some other issues going on that have kept us from doing much research, but we hope that in October we'll be back doing 3 stocks a day in terms of investments. So that's our performance for the month of August. Thank you for watching.